But A, it cannot violate A, which meaning we cannot have a higher high above A. Okay? Everybody tracking with me so far? A perfect Gartley pattern will have a 618 followed by a 618. Two 618 retracements. But we can have an imperfect one that goes a little bit higher than that. Now what do we create here? What will we call this leg of the move? We got X to A to B, B to C, right? This would be the BC leg of the move, or the BC retracement. Because what we've got is a series of retracements, don't we? All price action is taking place in between what? In between X to A. All price action is taking place in between X to A. And so these are nothing more than retracements of X to A. And actually the BC is a retracement of AB. Make sense? Everybody tracking? Alrighty then. Now, the next thing that's going to happen is we are going to get a perfect or semi-perfect ABCD move. So we're going to get a projection. This market's going to press down. We're going to get a retracement into a 618, and then we're going to get an equal distance move down. Everybody following? Now, if this is done correctly, what you're going to get is you're going to get roughly, by bringing my Fibonacci extension, swing high to swing low of A to B and back up in, you're going to get roughly a 127 extension, and you're going to get confluence at a 786. Do you see how the 786 and the 127 extension line up perfectly in this particular scenario? Now we have an absolutely perfect Gartley. We tapped the 618 on the nose and we tapped the 618 on the nose. It's not always going to happen that perfectly because markets are imperfect. But this is what we're looking for. We're looking for 618, 618, 127 extension with 786 ratio confluence. Yes? If we get into a situation where the 127 and the 786 are not lining up perfectly, we're going to default to the 127 extension. Okay? We're going to default to the 127 extension. So it's nice if the 786 is lining up there, but it's not imperative. It's not what's most important. What's most important is that 127 extension, we're going to look to be a buyer at the 127 extension. 127 extension of A to B. Okay? Any questions on that? In this particular case, there's no zone to buy. There's actually is a zone to buy because what we're going to do is if we catch this pattern and we see it coming, we're going to place limit orders at the 127 extension. We're going to look to buy at 132.81. But there is a buy zone, and the buy zone exists right here, anywhere from that 127 extension down to previous structure at X. Meaning that if we come into this pattern late and we see that the market has come in and we may have pressed down just a little bit lower and we're not at the 127 here at 132.81, we've come a little bit lower into 132.76, is it still okay to buy it? Do we still have a valid pattern? Absolutely we do. Yeah, still perfectly okay. And a matter of fact, the deeper it comes, the better the risk reward gets, isn't it? Because where do you think stops are going to have to go on this particular pattern? Below X, that's right. If we're working on a 15-minute chart or a 60-minute chart, we're going to have roughly a 10-pip stop. So we're going to take the low at 32.65, and we're going to go 55 with it, and we're going to drop a line in there, and we're going to say, okay, this is my stop. So my entry is going to be somewhere in this zone.